Hello everyone, welcome back to my channel. I'm Japan Life Hacks. I'm delighted to have you join me for today's video. In this video, we start to learn about buying and selling merchandise. One of the primary activities undertaken by companies is buying and selling merchandise. Without a solid understanding, it's challenging to comprehend bookkeeping. Although this video might be extensive, I've tried to summarize it in an easy-to-understand manner. Now, let's get started. The first content. Journal entries for buying and selling merchandise. When making journal entries for buying and selling merchandise, we use three account name, purchases, sales, and carried over merchandise. When buying merchandise, we use the purchases, expenses account. When selling merchandise, we use the sales, revenue account. Carried over merchandise is asset account related to inventory of merchandise. It does not appear until video number 14, so it's okay to temporarily forget about it. Using these three accounts, we will make journal entries for transactions related to buying and selling merchandise. Now, let's consider journal entries. Purchased merchandise worth 500 yen and paid for them in cash. The journal entry is as follows. Debit, purchases 500. Credit, cash 500. Since expenses for purchasing occurred, we will debit the account. The credit side represents a decrease in the asset of cash. Next, purchased merchandise for 500 yen and sold them for 1,000 yen, receiving payment in cash. The journal entry is as follows. Debit, cash 1,000. Credit, sales 1,000. Revenue was generated through the sale of merchandise. Therefore, the revenue, which is sales, is credited. The cost of 500 yen represents the expenses incurred in purchases, and this is referred to as the cost price. On the other hand, 1,000 yen is the price at the time of sale, and it is referred to as the selling price. Sales revenue is recorded at the selling price amount. The second content. Accounts payable trade. Accounts receivable trade. When buying and selling merchandise frequently, making payments each time can complicate things. Hence, there are occasions when the expenses incurred over a certain period for purchases are paid collectively. Delaying payment for merchandise purchased until a later date is called on credit. This applies to receiving payments as well. The account name used in credit transactions for merchandise are accounts payable trade and accounts receivable trade. Accounts payable trade is a liability. It represents the obligation to pay the cash later. Accounts receivable trade is an assets. It represents the right to receive the cash later. Credit transactions are common in accounting, so it's essential to understand this concept thoroughly. Let's start by looking at journal entries related to accounts payable trade. Purchased merchandise worth 500 yen on credit. The journal entry is as follows. Debit, purchases 500. Credit, accounts payable trade 500. Since a liability, accounts payable trade, has occurred, it will be recorded on the credit side. Next, let's take a look at the journal entry when this accounts payable trade is paid. Paid 500 yen of accounts payable trade in cash at a later date. The journal entry is as follows. Debit, accounts payable trade 500. Credit, cash 500. Since the accounts payable trade is extinguished, we will offset and eliminate the accounts payable trade. Next, let's look at the journal entry for accounts receivable trade. Sold merchandise worth 500 yen on credit. The journal entry is as follows. Debit, accounts receivable trade 500. Credit, sales 500. Next, let's take a look at the journal entry when this accounts receivable trade is collected. At a later date, collected 500 yen of accounts receivable trade in cash. The journal entry is as follows. Debit, cash 500. Credit, accounts receivable trade 500. As the right to collect payment, which is accounts receivable trade, is extinguished, we record it on the credit side for processing. The third content. Credit card payment. In transactions involving the use of credit cards, please consider the perspective of the seller. When a customer purchases merchandise using a credit card, the seller cannot receive cash on the spot. The right to receive cash later is recorded as credit accounts receivable. Additionally, the fees paid to the credit card company are processed under an account called commission fee. Thanks to credit card companies, customers can make payments using credit cards, contributing to the revenue of the store. This entails paying fees as compensation for this service. Let's consider journal entries. Sold merchandise worth 500 yen via a credit card. Note that a fee, 5% of the sales amount, is treated as an expense at the time of sale. The journal entry is as follows. Debit, credit accounts receivable 475, commission fee 25. Credit, sales 500. 5% of 500 yen equals 25 yen. This payment fee cannot be collected through the credit accounts receivable. Therefore, 475 yen remains as credit accounts receivable. At a later date, the 475 yen of credit accounts receivable was settled, and the amount was transferred to the checking accounts. The journal entry is as follows. Debit, checking accounts 475. Credit, credit accounts receivable 475. Since the right to receive credit accounts receivable expires, we will record a credit to credit accounts receivable. The fourth content. Return. There are instances where purchased merchandise need to be returned. In such cases, we process a reversal of the initial purchase. On January 1st, merchandise worth 100 yen were purchased on credit. The journal entry is as follows. Debit, purchases 100. Credit, accounts payable trade 100. On January 10th, it was discovered that the merchandise purchased for 100 yen earlier were incorrect, so the merchandise were returned. The journal entry is as follows. Debit, accounts payable trade. Credit, purchases. We process the reverse journal entry of the initial purchase to account for the return. The fifth content. Delivery cost. The delivery cost is borne by either the seller or the buyer. Let's take a look at the journal entry for the case where the seller bears the delivery cost. First, take a look at the journal entry from the seller's perspective. The seller sold merchandise for 500 yen on credit. The seller paid the delivery cost of 10 yen, seller bears, in cash. The journal entry is as follows. Debit, accounts receivable trade 500, delivery cost 10. Credit, sales 500, cash 10. We will journalize the accounts receivable trade and sales for the sale of the 500 yen merchandise. Next, since the delivery cost is borne by the seller, we will record it as an expense. Next, take a look at the journal entry from the buyer's perspective. The buyer purchased merchandise for 500 yen on credit. The buyer paid the delivery cost of 10 yen, seller bears, in cash. The journal entry is as follows. Debit, purchases 500, advance 10. Credit, accounts payable trade 500, cash 10. I will explain advance. The buyer is making payments on behalf of the seller for delivery costs that the buyer is not originally responsible for. Therefore, this amount becomes a right to be billed later, and it is recorded as an asset. Next, let's take a look at the journal entry for the case where the buyer bears the delivery cost. First, take a look at the journal entry from the seller's perspective. The seller sold merchandise for 500 yen on credit. The seller paid the delivery cost of 10 yen, buyer bears, in cash. The journal entry is as follows. Debit, accounts receivable trade 500, advance 10. Credit, sales 500, cash 10. The seller has paid delivery cost which is not originally responsible for, giving seller the right to claim the amount from the buyer. Therefore, the advance, which is an asset, is journalized. Next, take a look at the journal entry from the buyer's perspective. The buyer purchased merchandise for 500 yen on credit. The buyer paid the delivery cost of 10 yen, buyer bears, in cash. The journal entry is as follows. Debit, purchases 510. Credit, accounts payable trade 500, cash 10. The point is to include delivery costs in the purchase. When purchasing merchandise, delivery cost is considered necessary expenses associated with acquiring the merchandise. The sixth content. Trading merchandise and other transactions. In bookkeeping, it's crucial to distinguish between transactions related to merchandise and those that are not. For instance, the journal entries for these two transactions are entirely different. For companies, trading merchandise is a significant transaction as it constitutes their core business. Therefore, transactions related to trading merchandise and those that are not are processed separately using different account name. In credit transactions related to trading merchandise, we use either accounts payable trade or accounts receivable trade. For credit transactions not related to merchandise transaction, we use either accounts payable other or accounts receivable other. Let's look at example of journal entries. Purchased merchandise worth 500 yen on credit. The journal entry is as follows. Debit, purchases 500. Credit, accounts payable trade 500. This is a credit transaction related to the merchandise, so accounts payable trade should be used. Next, bought equipment worth 500 yen on credit. The journal entry is as follows. Debit, equipment 500. Credit, accounts payable other 500. This is not a transaction related to the merchandise, so accounts payable other should be used. Thank you for watching the video. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your comments are the driving force behind the creation of my next video, so please feel free to leave them. Thank you very much in advance. See you next time.